So welcome again, everyone. This is the third session of the lab webinar series on climate finance for sustainable agriculture. The format of this webinar will be a half-an-hour presentation followed by a question and answer session. If you have questions during the webinar, type them into the Zoom chat box or the comment section if you're watching it on YouTube. We'll respond these verbally during the Q&A segment. And just so you know, we are recording, the recording of this webinar will be on YouTube afterwards, and we'll be sharing the slides with all of you attending the meeting on Zoom today. And with that, I hand it over to Daniela Kiriak, Senior Consultant at Climate Policy Initiative, and your host today. Hi, Daniela, over to you.
Thank you, Julio. Good afternoon, everyone. And thank you all for attending the lab webinar series on climate finance for sustainable agriculture. In this series of webinars that we developed together with the International Fund for Agricultural Development, we introduced some of the most innovative financial instruments that we supported and endorsed at the Global Innovation Lab for Climate Finance. This is the third and the final webinar that will present the lab's approach to impact assessment of lab instruments, which are focusing on agriculture, forestry, and other land uses, so AFOLU. We will also present findings from the Climate Policy Initiative's brief on government tools and agricultural lab instruments, showing how financial instruments can leverage public policies to enhance their impact and overcome barriers. Then we'll showcase the West African Initiative for Climate Smart Agriculture, which is a lab instrument that was developed in 2019 and is the only Africa-led blended finance fund with a specific focus on increasing the uptake of climate smart agriculture by smallholder farmers. So let's get started with today's agenda. To start with, Mr. Ahmad Patesene, which is the lead environment and climate for West Africa, West and Central Africa at IFAD, will offer his initial remarks, setting the scene for today's webinar. Then I will walk you through the lab's impact assessment of lab AFOLU instruments. And then coming next, my colleague Rosalie Bird will present some early findings, some of the findings of the Climate Policy Initiative's brief on governmental tools and agricultural lab instruments. Following these presentations, we will have a presentation of the West African Initiative for Climate Smart Agriculture, and then we'll have a Q&A session in which we'll be answering your questions. So without further ado, welcome Pate, the floor is yours.
I don't think Pate is on yet, so then if you could carry on with your presentation, then we go back to him.
Great, thank you, Julio. So let's skip forward to the next slide, if possible. So just to provide a little bit of context, I will start with a brief introduction of the lab for the benefit of those who are not familiar with it, in order to provide some context for the following sections of the presentation. The Global Innovation Lab for Climate Finance is a public-private initiative launched in 2014 to play a role in bridging climate investment gaps. It has a diverse and broad network of partners, which include more than 60 institutions, among which governments, project developers, commercial banks, national and multilateral development banks. As you can notice on the slide, IFAD is one of the lab members, and it has been funding our work at the lab since 2018, which helped us to establish the sustainable agriculture stream of the lab. Climate Policy Initiative fulfills the secretariat role for the lab. Concretely, what the lab does is to identify, develop, and launch sustainable financial solutions or financial instruments that have potential to drive billions of dollars from private sector investments into the low-carbon, climate-resilient projects in developing countries. The lab tends to focus on earlier stage ideas that have the potential to scale significantly. Many of the selected ideas at the lab employ a blended finance approach, which leverage public or concessional finance effectively in order to de-risk earlier stages of development and implementation. Over the past 6 years, the lab has launched 49 ideas to address investment barriers in a range of sectors and regions. And you can see on the slide, lab instruments are fairly evenly distributed across geographies and sectors, with a considerable number of 20 ideas focusing on Africa and 15 focusing on agriculture, land, and forestry. Moving on to the next slide, the elements of the lab, to next one. The elements of the lab impact framework that I'll present in the next slides are based on the methodology that we used at the lab over the past years, which was then complemented by a recent work that we conducted with the support from an external consultant, Christine Negra. Through our work at the lab, we see that investments in the AFOLU sector are characterized by complexity and diversity of financing needs and investment deals, and by the prevalence of fragmented and low productivity, high risk value chains. In the same time, smallholder producers lack assets, access to finance, and access to markets. As a consequence of all these features, ex-ante and ex-post impact assessment and monitoring of investments in the sector is confronted with a number of challenges. And those include time lags for financial investments to materialize and to achieve impact, high monitoring costs due to the numerous small-sized transactions, scientific data gaps for environmental and socioeconomic metrics, and inconsistent approaches to non-financial impact reporting across projects, value chains, and geographies. Just to provide more context on how we look at the impact within the lab, on this slide, I just wanted to illustrate in detail what are the main stages of the lab process and how environmental and socioeconomic impact assessment comes into play. To various extent, the capacity and the potential for environmental and socioeconomic impact of each instrument are assessed, strengthened, and developed at each one of these lab stages. The first stage is the call for ideas, which we organize every year in October to receive innovative investment solutions. At this stage, we ask proponents to document compatibility of their instrument strategy with environmental and socioeconomic sustainability opportunities and capacity building needs in targeted regions and value chains. After the call for ideas is concluded, in January, February, the Secretariat teams screen submissions against an established set of criteria, based on which then the lab members vote to select the most promising ideas that move into development. In terms of impact, at the stage of selection, we evaluate the maturity of the proponents' plans and their capacity for impact assessment. We also seek to identify assumptions and missing components in the instrument's impact strategy. The selected ideas then move on to the development stage, which happens over the next 6 months, and whereby the Secretariat and other lab members, lab experts, work with the selected lab proponents to develop these early stage concepts into bankable financial solutions. This is when the bulk of our work is in terms of impact assessment. And at this stage, we aim to formulate an instrument-specific ex-ante impact assessment approach that is based on 5 impact categories, then corresponding impact indicator types, and metrics, which I will detail in the next slides. During this stage, we also work with proponents to source relevant data, to establish baselines and characterize impact estimates. Once the analytical phase is concluded, lab members vote to endorse the final instruments, signaling their readiness for launch and the full support from the lab. After endorsement at the end of September, the focus moves to fundraising to launch pilots. In this phase, the Secretariat continues to provide an additional year of lighter touch support to help ensure endorsed instruments get off the ground. In terms of impact, we assist proponents with setting up their ex-post monitoring and impact assessment. We'll now take a closer look at the 5 impact categories that help us assess the environmental and socioeconomic impacts of lab financial instruments. The high variety of financial instruments we work with means that the exact choice of indicators will be dependent on the activities, the geographies, subsectors, and so on that the financial instrument targets. The first impact category is climate mitigation, which we define as the potential for a financial instrument to produce net reductions in greenhouse gas emissions. For this, we are looking at three main types of indicators: avoided emissions, carbon sequestered, and reduction of energy intensity. For instance, we could be using specific indicators like avoided GHG emissions from land conversion, from crop or livestock production, carbon sequestered in the ground, energy intensity of irrigation or of processing or transport of agricultural products. The second impact category is productivity, and together with the next three ones, they can be relevant for climate adaptation and resilience. This category is defined as the net increase in food, feed, fiber, or fuel produced per area. And possible indicator types are sustainable production, resource use efficiency, labor efficiency, avoided loss or waste, and diversification, with examples of specific indicators including amount or percentage of income coming from sustainable production, yield stability, land, water, or fertilizer use efficiency, total labor or labor intensity, and number of crops or products. The third impact category is environment. We define this category as the maintenance or improvement of environmental conditions, biodiversity, and or of flow of ecosystem services. Type of indicators that we are looking at and depending on specificities of financial instruments can include land use, ecosystem service flows, biodiversity, or ecological resilience. And again, some examples of indicators can be area restored or area that is under improved management, avoided land conversion or degradation, soil quality, avoided water extraction, agrobiodiversity, and change in the risk of extreme events in the production area. The fourth category is people, and we describe this as being improvements in individual, household, or community assets, in net income capacities, in the nutritional status, accounting for implications for marginalized groups. Type of indicators that we can use in this is participation in different activities, income or assets, risks, exposure to risks or resilience, socioeconomic well-being. And some examples include adoption or retention rates for different practices, value of products marketed and producer revenue, household savings, insurance coverage, or household food and nutritional security. The fifth and final category is looking at systems. And in this category, we want to see what changes in the local sectors, markets, value chains, technical and financial services, institutional functioning, and information resources an instrument can bring. As indicator types, we can look at sectoral development, market development, value chains, technical services, financial inclusions, or information resources, with some examples of indicators including cooperative or SME participation in activities, their revenue, their cash flow, the existence of off-takers for alternative products, the existence of supply of improved inputs and technologies, decrease in side selling, additional local finance, or financial inclusion of previously unbanked categories of population, or women or youth. Moving on, as mentioned in the beginning, one of the main challenges in ex-ante impact assessment, as well as for impact monitoring during the actual investment period, is the availability of data. And this is due to the complexity of the AFOLU systems and corresponding information and data systems. With this in mind, I just wanted in this final slide of my presentation to emphasize that we work with lab proponent teams to engage early on with a wide range of actors that have relevant regional or local as well as technical expertise from which data can be sourced. And this range from international or national agencies to technical service providers, research organization, development NGOs, independent verifiers, but also include individual producers, value chain companies, financial institutions, insurance providers, and utility companies. With that, I'll now turn over to Rosalie, my colleague Rosalie, who will present the findings from the Climate Initiative brief on governmental tools and agricultural lab instruments. Over to you, Rosalie.
Thanks, Donna. Real quickly, I see that Pate is on, so I want to hand it over to him real quickly to provide some welcoming remarks before I dive into the next section.
Great idea. Thank you, Rosalie. Welcome, Pate.
Thank you so much. Thanks, Rosalie. Thanks, Daniela. And also, it's great to see the Rosalie, my former colleague in Brazil. And also, thank you so much for the great work we are doing. My apologies. I was trying to connect and my connection was having some issues at the beginning. But in terms of opening remarks and also taking into this discussion, which we've started since 2018, I think with all your colleagues, so I think it's also yielding to good result and new development. I am very pleased to deliver this opening remark at this webinar series developed by your institution and IFAD, in which the lab is presenting some of the innovative financial instruments to catalyze greater investment into sustainable agriculture. So the agenda of today, which is enhancing impact of agriculture, forest, and land use finance instrument, is timely, particularly in a context of COVID, when access to financing is to address the most pressing development issues. Obviously, climate change is a key issue for government. So we are in a situation where accessing is a problem, and the fiscal space is very narrowed in many countries, and most of these investments are channeled into the health to address COVID. So today, the agenda, which aim at addressing two paradoxes that many West African countries are also facing, Africa in general. We have the paradox of food insecurity in the midst of fertile but uncultivated arable lands, which we all know, and the paradox of accessing to finance in the midst of unexploited opportunities for investment and innovation. So the region is a land of opportunities, and we do have those opportunities to seize when we are investors or financiers. So let me begin by articulating the paradox of Africa or West Africa in failing agrarian economies. Now, we have more than 6 million hectares of uncultivated arable lands in the continent, 60% of the global land. Yet, about 1/3 of the sub-Saharan Africans still suffer from hunger. So, most of them are smallholder farmers living in rural area and the target of IFAD. Instead of being a net exporter, we are currently now a net food importer, spending almost $35 billion a year for, of scarce foreign exchange annually. And this will prevent us also for investing on productive sectors like agriculture. The three main factors account for rural farmers, agricultural economies, and the performance and low productivity. The first one is the large proportion of West African agriculture depend on rainfall, Africa in general. So, and this is mainly also impacted by climate change. When we talk about rainfall, it's precipitation and temperature variability. And only 6% of the cultivated land in the continent and less in West Africa is equipped for irrigation, compared to 46 if you look at South Asia or 56 in East Asia. And accelerated irrigation has a potential to improve land use efficiency, but also boost the productivity, and by as much as 50%. And this requires, of course, innovation and technology, which we will be talking, and which also the presentation of Daniela has shown earlier. Second is slow growth in productivity, particularly in the COVID context, because we are also in an interconnected world. And this is mainly due to underinvestment and undercapitalization in terms of technology and innovation. So mostly also lack of information, infrastructure, we talk about it. And when we talk about infrastructure, climate resilient infrastructure, fractured market, and lack of capacity to address all the risks posed by climate change in the AFOLU. So this is another reality. The last point is, urban bias development. We all know policies which exacerbate the rural poverty, particularly in the context of climate change. This leads to migration, rural-urban climate-induced migration, increased urban-informed economies, and urban poverty. So it is a reality in the region, which call also for innovation and innovative instruments. So the underperforming agriculture is shifting the effective functioning of financial sector. So it is risky, seen as risky, perceived as risky by the financial sector and investors. Consequently, so the second paradox, which is weak linkages between agriculture, climate resilient agriculture, and investment, green investment, loan, grants, equity, insurance, in the face of a myriad of opportunities. Opportunities are there, but this is also the reality on the ground. So we have the most dynamic region in the world. 3 or 5 of the most rapid growing economies are in the region, despite the COVID. So they are still growing at the pace of 3% a year, and attracting more investment, particularly for green investment, to increase the production, technologies, innovation is needed, and to improve also the transition towards green post-COVID recovery, and obviously to respond to the climate, to the Paris climate deal. So using such impact assessment of the lab instrument, focusing on agri, forestry, and land use to boost all sectors, call for strong public-private partnership. So in IFAD, we call it public-private partnership and producer partnership. So producers, it's the 4 Ps. We go beyond, because most of the time they are left behind or not part of the sharing of the return of investment in all value chain. And farmers' productivity, enhancing their contribution to national, regional value chains should be key into all instruments we are developing. As a matter of urgency, so we must establish, any kind of policies, public and private investment in AFOLU, stimulate innovation, and de-risk most of our investment, particularly when we are talking about climate change. So while commercial farming has a role to play, it's not a panacea. So we see also commercial farming growing with bigger players like Cargill and others in the continent. But again, today, to reduce poverty, we need to increase smallholder farmers resilient to climate change, their share of the market access, but also use, all type of techniques and technologies to measure, that impact. And I think the work you are doing is quite strong on that and provide us guidance. So we are currently developing and testing financing instrument in IFAD, and I'm delighted that we gather here also to discuss these findings from your perspective and from the lab, and also have further opportunities to overcome, any kind of barriers we face. So colleagues, participants, agriculture could be a golden gate to the West African prosperity, transformation, rural transformation, stable society, inclusive societies, particularly for youth and women. So I have also highest confidence that this webinar will also provide us some insight and also guide us on that journey. Thank you for your attention.
Thank you so much, Pate. And one of your last remarks was pertaining to barriers to financial investments into the agriculture and the AFOLU sector. And that's one of the points that Rosalie will address in her presentation. Over to you, Rosalie.
Thanks, Donna, and thanks, Pate. I think that was a great transition into this next section of the webinar, As we do know, there's a lot of barriers that prevent climate finance from flowing into sustainable agriculture and land use, leaving a large gap between the actual finance that's provided and the finance that's needed for this sector. If you go to the next slide, we have a graphic here of out of the annual average $570 billion US in climate finance, only $8 billion goes to small scale sustainable agriculture, forestry, and other natural resource management. The lab instruments actually offer diverse approaches and useful lessons learned on effective climate finance mobilization into sustainable AFOLU projects. And they shed light on the type of barriers that do exist to financing while also offering experiences on how to best overcome these barriers. Within the lab portfolio, many instruments provide design examples and lessons on the potential of leveraging public policy tools to maximize chances of success. With the support from IFAD, the lab secretariat produced this brief on its findings, seeking to inform the development of new sustainable AFOLU financial instruments in the future. So what is a successful financial instrument? The main objective of the brief was to understand how the linkages with policy tools, specifically national regulations and financing, can contribute to the ability of sustainable AFOLU instruments to overcome common barriers. That being said, we use the lab's criteria to define this type of success, with the three main factors that reflect what the lab defines as essential to overcoming barriers and achieving success. One being actionability, meaning the instrument has identified a pipeline of bankable projects as well as implementing partners. Two, catalytic potential, meaning the potential to mobilize capital within a sizable market, be replicated and achieve socioeconomic and environmental impacts. And lastly, financial sustainability, meaning the instrument demonstrates the potential to achieve market viability and phase out public financial support. So as you see here, the lab, there's three main lab instruments that we focus this brief on that provide examples of how policy tools such as national regulations and public finance levers can be used to achieve this success. They also inform us of the risks that may exist in doing so and offer design considerations to keep in mind when developing related instruments. The Responsible Commodities Facility provides an example of how a credit facility can align lending conditions with national land use frameworks. The blockchain climate risk crop insurance highlights when and how to use government subsidies for insurance premiums, and the Connexus Impact Fund demonstrates the potential to expand the amount of sustainable projects covered by subsidized rural credit lines. The analysis in this brief was drawn off of desk research, as well as interviews with the instrument proponents and other field experts, and the lab's own experience in developing the ideas along with the proponents. The Responsible Commodities Facility, or RCF, is our first instrument for as a case study, and it was proposed by BV Rio. The instrument leverages national legislation, in this case, the Brazilian Forest Code and the related registry system. The fund provides credit raised on international bond markets to farmers that produce soy in existing cleared integrated lands in Brazil, in order to discourage the further expansion of agricultural land in the country. The lending conditions and eligibility criteria for RCS products are linked to public policies, mainly being farmland must be registered within the registry system, and producers must demonstrate compliance with legal forest reserves in accordance with the Forest Code. RCF offers lessons for how linkages with relevant land use policies can contribute to overcoming barriers, including identifying a pipeline, obtaining buy-in from government, generating impact, promoting new markets, and fundraising. Some measures should be considered, though, when designing similar instruments in order to mitigate risks and ensure success. These include setting realistic but ambitious lending conditions to strengthen climate and sustainability efforts, implementing strong monitoring systems to avoid unintended impacts, aid in enforcement of regulations, and track compliance and impact, seeking coherence with local, national, and internationally agreed objectives, and marketing the economic benefits of sustainable practices to stimulate demand of those products. Here we see the second lab case study, which is the blockchain climate risk crop insurance, which offers a weather index crop insurance product that relies on blockchain for the management of policy contracts. The instrument is being implemented by Acre Africa and Etherisk. Governmental subsidies for insurance premiums are an option for this financial instrument. While the initiators have not yet incorporated subsidies into the instrument, premium subsidies can be important in the medium term when there is a shift towards a more integrated business model. This will help encourage uptake by contributing to a lower price for the insurance product or increasing insurance coverage for the same amount. As we saw from the proponents' interviews with the proponents and as well as some desk research, in order to best mitigate the potential risks associated with using subsidies for insurance premiums, design considerations include the temporary use and specific timing of subsidies to avoid market distortions and to help commercial viability, choosing an index-based design to mitigate the risk of reduced due diligence, and bundling insurance with inputs and services. Farmers' capacities to manage risk should be prioritized, and wider agricultural risk mitigation measures should be bundled together with the insurance product. Lastly, we have the last of the lab case studies, which focuses on leveraging public financing as well, the Conexus Impact Fund. Conexus Impact Fund, proposed by the Instituto Conexus, provides an example of how a financial instrument is leveraging public credit lines in an attempt to alleviate pressures to deforest and facilitate smallholders' access to credit. Conexus Impact Fund is designed to direct more resources from PRONAFI, Brazil's subsidized rural credit line, to sustainable production systems that keep forests standing by offering a set of financial products and services that help producers in forest-based value chains unlock this public financing. Some of the design considerations for Conexus Impact and for leveraging public finance in this way include being sure to align with relevant subsidized credit lines to ensure complementarity, strong due diligence on public rural credit to ensure demand and uptake, partnerships with local financial institutions to encourage other market actors' participation, and the provision of financial literary assistance to help increase borrowers' credit readiness and their future access to commercial finance. So overall, it was a very quick idea of what's in the brief, but just to show that these different three designs have the common ability to overcome a lot of the different barriers that we see that prevent climate financing from getting into those projects. Specifically, barriers related to simulating demand for climate relevant financial products, identifying project pipeline, generating and demonstrating measurable social and environmental impacts, and attracting public, philanthropic, and private investments. Not only can financial instruments use these policies as tools to overcome the barriers, but they can also contribute to greening existing AFOLU support policies. We hope that in this brief, we can reach out to lab stakeholders, including potential proponents of new financial instruments, and to draw on these recommendations during their design stage, as well as when they're planning implementation and partnerships and fundraising strategies, to be able to maybe leapfrog some of the obstacles that previous lab instruments and other financial instruments in this sector have encountered to delivering some of the most transformative impact that the AFOLU sector needs to see. Very open for all your questions. I know it's a lot of information, but at the end, we will be able to address any of those questions that you may have. Thanks, and back over to you, Donna.
Thank you so much, Rosalie. I'll now invite Ashia Biosawe, environmentalist and climate finance specialist at the ECOWAS Bank for Investment and Development, who will present the West African Initiative for Climate Smart Agriculture. Welcome, Ashia, over to you.
Thank you, Daniela, and thank you very much. My presentation will be on the West African Initiative for Climate Smart Agriculture. I would like to take the opportunity to thank the lab for its support throughout the development of this initiative. So the next slide will provide an overview of the agenda. So given that the initiative is managed by the ECOWAS Bank for Investment and Development, we thought it was good to give an overview of the bank, and then the second part of the presentation will focus on the initiative, what are the activities undertaken so far, and then what are the perspectives. So the next slide, a bit about the ECOWAS Bank for Investment. Let's say that it is an international financial institution of the 15 member states of the ECOWAS community of West African states. So the member countries include Sahelian countries like Burkina Faso, Mali, and also other coastal countries like Benin, Ghana, and Togo. So let's just say that the bank emerged from the transmission in 1999 of the FY ECOWAS Fund for Cooperation, Compensation, and Development, and that the bank was restructured in 2006 into a single entity, one for the private sector and the second one for the public sector. So the next slide provides a bit of the vision of the bank which is to become the leading regional investment and development bank in West Africa. And our mission is to foster the emergence of an economically strong, industrialized, and prosperous West Africa with a fully integrated economic system at regional and global level. So in order to do that, like I mentioned, we have two windows. So the private window focused on the promoting private sector activities by providing equity, guarantee loans, advisory services in sectors like infrastructure, industry, services, and energy. And the public sector works with the 15 member state government by providing loans and guarantee for the implementation of infrastructure, social, and rural development projects. So the next slide. The next slide shows a little bit of our impact. So as of December 2020, so the bank has financed over 298 projects in different sectors. And as you can see, 60.50% of the project that we financed was in infrastructure. So infrastructure projects are mostly energy, transport projects. So this project contribute to the sustainable development goals, mainly goal 7, 9, 10, and 1. So the next slide. So given that we are talking about the West African Initiative and it is also a fund, so we thought it would be good to present our experience in managing other funds such as the Cultural Industries Guarantee Fund, the African Biofuel Fund, the Specialized Fund for Telecommunication, which focus on financing telecommunication infrastructure in the 15 member states. But our focus today will be the Regional Fund for Agriculture and Food. So the next slide. So let's just say, because it will be incomplete to present the West African Initiative without giving, without presenting the regional fund, because that's where all started. So let's just say that, so in 2011, so the ECOWAS Council of Ministers created the regional fund with the purpose of channeling most of the internal and external resources mobilized for financing regional dimension of ECOWAS agriculture policy and the regional agriculture investment and food security program. So for that purpose, so they created the fund, which has 5 main windows. So the first window, we see that it aims to support food security. The other window aims to support policy and regulatory framework, support innovation and capacity building. So the 5th window is the West African Initiative for Climate Smart Agriculture. And this initiative was created in 2019, given the impact of agriculture, the impact of climate change on agricultural productivity or small scale producers who supply up to 80% of the region product. And because it has shown that climate change impacted the small holders more than has a high impact on small scale producers. So that's why the 5th window was created. So the WISCA is a blended finance fund. It targeted the 50 states of the ECOWAS member states. And let's just say that in September 2019, the WISCA was selected as one of the 6 innovative climate finance instruments endorsed by the law in New York. So next slide, please. So just a little bit of the design of the WISCA. So the WISCA has 2 main facilities. So the first facility is the financing facility, which aims to provide loans, guarantee, equity, investment to small farmers, smallholder organizations, agro-entrepreneurs through local financial institutions. And the other facility is the technical assistance facility, which aims to assist financial intermediaries in designing loan products that incorporate climate smart agriculture conditionality and aims to guide the smallholders in the implementation of climate smart agriculture practices adapted to local context. So we think that while the project, upon the implementation of the project, that the initiative can convert 1,855,000 of smallholder agricultural land to climate smart agriculture, which represent over 90,000 households will be able to limit the exposure to climate risk, and this will allow to reduce the 2 million tons of CO2 annually. So the next slide. So I don't know if I mentioned that the WISCA, we have different phases. So the first phase is that we want to target 6 of the ECOWAS member states. So this will be the pilot stage with the aim of replicating it if the project is profitable to the other 15 member states. So the target size of the pilot project is we want to mobilize 80 million. So like 80% will be for the financing facility and the 20% for the financial assistance facility. So, yeah. So what are the key activities undertaken so far? So far, we have been working on operationalizing the pilot phase of the WISCA. So first, we develop all the TORs and try to recruit all the consultants to start the preparation of the key documents that are necessary for the operationalization of the WISCA. So some of the key documents, we have a business plan, communication strategy, the resource mobilization, and the operational guideline. We also, because we mentioned that the financial facility will also use financial intermediaries at the local level. So a call for interest was launched in all the 15 member state countries in order to select some key financial institutions that will support the initiative. Also, we addressed a number of requests to our partners such as AFD, GCCR+, and we were able to obtain a 10,000 euro grant from GCCR to develop the marketing strategy. We also received 1 million euro from the ECOWAS Commission. Also, during the last years, we've also been able to organize the first steering committee, which allowed us to validate the operationalization strategy and the annual work plan of the initiative. So, like I mentioned, during 2021, so before the end of the year, we want to make sure that all the documents are ready. So, as you can see on the table, you will see that the draft of the operational guideline, the resource mobilization strategy, and the business plan are already available. So we are currently recruiting a consultant for the development of the communication and marketing strategy. And the consultant is currently working on selecting the key financial institutions that will take part in the pilot phase of the initiative. So the purpose also is that at the end of the year, so by December 2022, we want to organize a roundtable in order to mobilize partners, our technical partners around the initiative to mobilize resources to launch the pilot phase. Next slide, please. So this slide provides a recap of everything that I've said, but just key messages that you can take on is that in 2011, the fund, the Regional Fund for Agriculture was created. In February 2019, the agreement for EB to manage the fund was signed. In April 2019, given the impact of climate change on smallholders, the WISCA, the fifth window, was created. And in 2019 September, the WISCA was adopted in New York. In 2019, the ECOWAS Commission contributed 1 million UA. So from January to April 2020 until now, some of the TORs were prepared, and currently we are developing the essential document for the operationalization of the fund. Let's say in October 2020, we organized our first steering committee. And right now in 2021, all the projects, all the key documents are we are finalizing the key documents that are necessary for the operationalization of the fund, with the purpose that by the first quarter of 2022, we launch the first pilot phase of the initiative. Thank you very much for your attention.
Thank you so much, Ashia, for the presentation. At this point, we would like to take any questions you may have. If you would like to ask a question, please type it into the chat box, or you can even unmute yourselves and speak. I think there must be a function to raise your hand, but you can also just unmute yourself and speak directly. And maybe to kick off the session to break the ice a little bit, just to mention that the brief Rosalie presented will be available publicly shortly. So we are waiting for just the final confirmations from IFED and in order to allow the publication of the brief. And so while waiting for that, Rosalie, would you mind providing maybe a little bit more detail on the barriers that the combination of financial instruments with policy, national policies can overcome?
Yeah, definitely. I think that it's something that, we had mentioned at the beginning of the webinar, and I think that it's well warranted to discuss a little more, just considering that a lot of the barriers that we see in AFOLU financial instruments are so common and are so prevalent in a lot of the different spaces. So what we saw that kind of were the main barriers across instruments that were able to be tackled through some type of connection or leverage with these policies related to being able to identify the pipeline, which we see a lot of the times these financial instruments will not be able to get off the ground if they don't have a demand, if they don't have the type of the pipeline that they will be able to address. In the RCF, the Responsible Commodities Facility, for instance, they were able to identify more of a pipeline based on the land registry system that they were able to tap into, as well as be able to really simulate demand by suggesting that there is another market and then opening this other market for products that were more responsible and in effect actually being able to bring more farmers on. Demonstrating and generating impact as well, being able to tie to different policies and demonstrate that these policies are, for instance, for RCF, that they're able to actually have more compliance due to the financial instrument itself has been able to show that there is impact for those investors, and it's not just something that's coming out of nowhere, but it's actually really aligned with the national policies, and something that investors have mentioned that they really like to see as well. And just fundraising in general, I think that it's been able to help the three instruments, especially for the Connects Impact Fund, considering that proponents are leveraging so much of investors based on the idea that they are opening up this financing, this public financing that is just completely wrapped up right now and not available for sustainable agriculture. That was really able to open it up for fundraising for other investors that saw the benefits of opening up that public financing.
Thank you, Rosalie. Meanwhile, we have two questions in the chat box. First one from Anne-Marie. So that's addressed to Ashia. Regarding the WIXA instrument, who are the managing officers responsible for communicating and interacting for additional information concerning procedures and technique, and so on, to develop projects, innovative work, innovation with smallholders? Ashia, would you be able to answer that?
Yeah, hello?
Yes.
Hello.
Yeah, we can hear.
Yeah. So the first question, who are the managing entities? So right now the fund is managed by the ECOWAS Bank for Investment and Development. So right now, after the operationalization of the fund, there will be a unit that will be created within the bank and that will manage the WIXA. And of course, this unit, the key people that we manage will comprise people from the ECOWAS Bank, from the ECOWAS community, the ECOWAS community that is in Nigeria. It will also comprise people from the regional fund for the regional agency for food, AHA, which is here also, which is headquartered here in Lomé, and we comprise people from the bank as well. So there will be a unit that will be responsible for managing the day-to-day of the initiative. I don't know if that answers your question.
Thank you, Ashia. I will ask Anne-Marie to perhaps write in the chat box if that answers her first question. She has a second question concerning which private investors are participating in the workshop.
Yeah, so for now, thank you for that question. Like I mentioned, for now, we are trying to make sure that we have all the documents, because in order for us to be able to mobilize investors, because when we go to them, they want to know what is the business strategy of the fund, what is the resource mobilization strategy, what are the guidelines. So we understand that in order for us to be able to really mobilize more investors, we need to develop this document. That's why it is our priority that before the end of this year, so by December 2021, we have all the documents. But so far, Agence Française de Développement, they have shown interest in the project, in the initiative. Of course, the ECOWAS community will also contribute. So the ECOWAS is public. Our bank will also contribute a percentage as well. So far, we have not. We do not have like specific, like we cannot pinpoint it right now. And that's why when we have all the documents during the first quarter of 2022, we will organize a roundtable to mobilize private investors. Thank you. I don't know if that answers your question as well.
Anne-Marie says, thank you. So I assume that answers the questions. Next question comes from Ranieri, who's thanking for the insightful presentations, and has also a question for you, Ashia. I wonder if she could tell us a little bit more about the eligibility requirements for SMEs to apply for funding once it starts operating in Q1 of 2022.
Okay, so what does she mean by SME? Because I mentioned that the WISCA has two facilities, okay? So the first facility focus on, providing loans, guarantee, equity, and we will do that either directly or through financial intermediaries. So I don't know where the SME is coming from on the small and medium enterprise, because the SME, I mentioned SME, but that was when I was presenting the bank. So those that qualifies are, agricultural business and smallholder organizations.
I think what she means, or he means by SMEs, is the small agriculture businesses.
Oh, okay.
So the beneficiaries of the loans.
Okay. Yeah. Then these people can, these people can definitely apply. That's why if you also if you follow the presentation, I mentioned that we did a call for interest. We launched a call for interest in order to select, financial intermediaries, that will give the direct loans to those small farmers or, SMEs. And after that. Hello?
Excuse me, sorry to interrupt. Thank you, Ashia. Sorry to go into the audio here, but I just wanted to qualify the question because perhaps it was too of a generic one, too much of a generic one. So let me just to clarify here. Now, you were saying that this new financial window, private financial window, made through a blended finance structure that you have at ECOWAS, right, from the development bank, is, you have a technical assistance facility and you have your senior and not so senior investors, which is fine. That's great. My question is whether you're lending not to financial intermediaries, right? Because then these financial intermediaries would have their own requirements, which then at the end would increase the interest rate for the smallholders or other SMEs. My question is whether you are lending directly to SMEs, and if so, what are the requirements? What are you operating in local currency? Are you operating in foreign currency here? You said you also have guarantees. I mean, are you going to be receiving applications from those companies that don't have collateral, for instance? What about value chain operations? So I'm just trying to see here whether this financial window that you're creating is somewhat different, how much it differs from the other different windows that are operating in the region, particularly in West Africa, of course. Thank you.
Okay, thank you for the clarification. So these are things, thank you. So for example, one of the key requirements for the SME is that they have to be in the member state. So in the 15 member state. So if you are not in the 15 member state, you are disqualified, okay? So the second requirement, for example, is because some of the key things, like I mentioned, we have a pilot phase. The pilot phase will focus first on 6 countries that are mostly vulnerable to climate change. So one of the conditionalities is climate smart agriculture. Like we want to make sure that the project that you are bringing takes into consideration some climate smart agriculture practices. And of course, you need to have previous experience in this type of project as well. So like I said, as of right now, the project is under development. And like I said, the documents are under preparation. So all these key criteria will be finalized, like I said, by the end of the year.
Okay, thank you very much. So you don't have information in terms of interest rates and other basic requirements?
No, it's too soon. It's too soon. And also, obviously, working for a financial institution, that it depends on the risk and the experience in the field. So, it's based on all that we will define the rate.
Wonderful. Thank you so much. Thank you very much.
You bet.
Thank you, both Daniele and Ashia. We had another question from Yao, who would be the main beneficiaries of WIXA, and if civil society organization can also access those funds. If you could quickly answer that question, Ashia, because we should close very soon.
Oh, yeah, so the main beneficiaries are agricultural business, smallholder organizations, small farmers. But mainly we want the smallholders organization, just to be, to make sure that we can have the return that they organize. So it's mainly that.
Thank you. Thank you, Ashia.
And for civil society, also, can they also access? If it is if it is an agribusiness, a smallholder organization. But like I said, some of these key dimensions will be finalized later during the year. Thank you.
Thank you, Ashia. There is a question from Vanya. If we can share a link to the newly developed manual for enhancing environmental and socioeconomic impact assessments for the lab supported instruments. This has not been released publicly. It's being finalized right now. We initially conceived it as being an internal document that will be used by lab analysts. But if there is interest, and I guess this question shows that there is interest, we could publicize an adapted version for external audiences. But that will be done in the next month. So for the moment, this is not available online. I see that Anne-Marie has another question, but as we are running out of time, I will.
Well,
Yes.
I just wanted to have a straight question to Aisha. In the developing phase they're working on, what is the collaboration they intend or have already with ECOWAS agricultural research centers? Well, how are they working with them if they do?
Ashia, I don't know.
Yeah, hello. Thank you, Anne-Marie, for your question. So right now we are working directly with the ECOWAS Commission. So far, we have not worked with the research center, but this is something that we will do definitely because before we launch the project, there will be a due diligence mission in each country, to identify what are the key climate smart agriculture practices. So like I say, it is still under development. And of course, some organizations like yours, like the Research Center, are some of the key organizations we will have to speak to when we go on each country.
Thank you, Ashia.
Thank you.
I think with this, we will have to conclude our webinar. So thank you very much for your interest and for all the engaging questions. We will follow up via email, sending the link to the presentation that we used and also to the recording of this session. I think you might be interested to learn that the Global Innovation Lab for Climate Finance has just endorsed this year's class of innovative climate finance solutions. We will make the public announcement tomorrow, but if you would like to learn more about these ideas, please register for the demo day, which will happen on October 20th. And which will give you the chance to learn about the 6 cutting-edge investment solutions that support sustainable development goals in emerging markets. Also, if you want to know more about the lab program and maybe submit an idea, consider subscribing to our newsletter. This way you will get first-hand updates on the lab news. And for your information, the next call for ideas will be open on October 20th and will run until the end of December. With this, I'd like to thank you so much for joining. Thank you, Pate, and thank you, Ashia and Rosalie for the presentations. And thanks to all the participants for the questions.
Thank you. Thanks, Daniela. And thanks also to your colleagues. We look forward to continuing the work with you.
Thank you
so much.
Yeah, thank you very much,
Thank
Daniela,
you, Rosalie,
for your support in developing this initiative. Thank you.
Thank you. Bye-bye.
Bye.